Welcome back to Trading Hour. Well, Pramod Amthe from Incred Capital joins us now to discuss market fundamentals and his top sectoral picks. Good morning, Pramod. Thank you so much for joining us. First up, what are you making of markets at the current levels? And especially, do you have any specific view on the Pharma pack today? The entire pack seems to have taken a big knock.
As we released a recent report clearly stating that we cut our Nifty targets, considering the fact that the challenges in the economic growth momentum are very much visible, and hence we feel that we will be either sideways to downward direction is where our discomfort is. The trade to look at is definitely the rupee depreciation, where our preference is both in terms of IT and pharma. Even though there might be short-term challenges in terms of US policy action threat, or in terms of technology challenges, which may be a short-term overhang for stock performance in these two sectors. But I think broadly, the outperformance for these two sectors, which was seen in the second half of CY24, we expect them to continue to deliver for CY25 in a market which is going to be a flattish to marginally downwards.
Pramod, hi. Morning, Reema here. You have a bear case Nifty target of 21,016. So if we have to get to this bear, what goes into your bear case target? What has to happen? What has to unfold? And what is the probability of it? Because so far, it's not that the earnings have gotten off to a great start or the price reaction to it.
So the way we try to do it is, considering the volatility, we try to put across different economic parameters to reach bull or bear case scenarios, and as a part of which we are called out the bear case for the same. We currently look at a bear case probability of around 40% versus a base case of 50% for FY26. Some of the factors which we are trying to put across is definitely one is oil, which has started moving up recently. Second one is in terms of GDP growth, we seems to be inching more towards 6%. If there is a hope that we should bounce back, but it needs to be more towards 7% than below 6%. So I think, and also the repo rate cut expectation is somewhere around 75 basis points. If it doesn't yield that, and we are hardly do 25 basis points for this year, so then it will call off for a bear case scenario, which we feel is a 40% probability as of now. That leads to a 21,000 target in the worst case scenario for us based on the FY26 earnings.
Understood that. So in the current market scenario, which are the sectors you like and which are the sectors you look to avoid?
So the sectors which we have, as I indicated already, IT and pharma, we would be a buyers into pharma in the correct, even today's correction. Even though stock specific wise, couple of names might be impacted, we await a detailed policy report from the US, how they will plan to handle it. Where we are constructively remain positive is one in terms of aluminium. Second, cement, we expect the worst is already captured. It should come back as the infra spend comes through. We are positive on the broader EMS space, where there is still a very strong, nearly a 80 to 100% type of EBITDA growth momentum, which is continuing. And we are turning constructive in terms of agri-chemical space, even though the rest of the chemicals remain negative for us. So those are the couple of sectors where our comfort lies.
Is Laurus in the pharma space a stock that you look at and track? And what have you made of the reaction to the developments today? A bit of an overreaction, or it's warranted?
I think broadly the market itself is in a correction phase. So hence the probable negative news are getting discounted much sharper. As I said, it is a possibility which may come through for a couple of stocks, and hence the worst is getting discounted in a very short time frame. We have been consistently upgrading pharma names in the last 6 months, of which even Laurus is the one which we upgraded. We'll wait out for the policy action report to come through, but I think the results were pretty decent, especially for companies. Our preference is still a large caps in pharma, where we would prefer companies like Lupin, Ipca as compared to even. So the broader story which we are trying to play in pharma is near double-digit growth in domestic, select drivers for global export molecules than a broad-based US driver.
Okay, let's get to some of your high conviction stocks. And to that, you've added Deepak Fertilizer and you've deleted Exide Industries. Take us through that call.
So specifically to Deepak, the drivers which we are looking at is one, the cost reduction happening through its own internal ammonia capacity expansion and the gas contract which they have. So that will be an initial EBITDA driver for them, followed by the end product capacity expansion, which should play out in the next 2 years phase. So those are the three drivers which we are looking at specifically to Deepak Fertilizers. We initiated on Deepak last month and added to the high conviction list on a bottoms-up strong earnings growth visibility. Exide is been underperforming the broader market in last couple of months. It's almost near our target price. And we feel that the people are getting realistic about the challenges in ramping up the EV cell plant as compared to the euphoria generated by the signing of Hyundai deal. So as a result of which, Exide has been removed from the list.
Thank you so much, Pramod, for joining us and giving us a view on the markets as well as the fundamental stock calls. Well, time now for a short break. The management of Mankind Pharma joins us on the other side to discuss their Q3 numbers.